Hi, this is George. In this video, we are going to see how I made 1 lakh profit in 3 months. Before getting into the video, please do subscribe to this channel. Also join our Telegram channel and please do like the video if you genuinely like it. Let's get into the video. Generally, I don't say like how much I made in what or months, or I generally don't share my like P&L account or anything that way. But in this, I'm sharing. Only reason is because this is a like kind of a very simple strategy, but many people don't do it. Maybe because this does have risk, but there is really, if you just sit tight and if you be patient, most of the time you'll be in profit, but it might at times give heartbreak and heart attacks at times. But if you are like a kind of a person who is like kind of firmly believing that market will definitely go up, because it's a purely a bullish strategy. So if you are such a kind of person, like if you are like kind of a mostly an investor, that no matter wherever market falls or anything, you will be like remaining stable, then this strategy can be like utilized by you. And also one more thing, you need to have a little more capital in this. We'll cover everything in this video. So in this case, like the last 3 months, the maximum capital that I used is only 3 lakhs, and in that I have made almost 1 lakh, which means like 33% returns in 3 months. As I said, it is like kind of an investment bot trading strategy, and usually all the videos will be like mostly of time-based entries, but this is only spot-based entry. And this is, as I said again, like it is a bullish strategy. So no matter what happens, I'll remain bullish and I'll wait for market to go up. Disclaimer, this is only for educational purposes. Please do your research before taking any trade. This is not a recommendation, but just my view. In this example, or like in this trade, I generally use synthetic future. I don't use futures, because due to so many reasons, most of the people might know. If not, then maybe I can walk you through in some other video, not this time. But now what you need to know is like we are going to use synthetic future instead of future. Synthetic future is nothing but we are going to buy call and sell put of the same strike price for the same expiry. That is what a synthetic future is. This will have this exact same payoff graph chart, just like a futures. Adjustments are very minimal, so suitable for working professionals and part-time traders, just like my every other video. So let me just tell you what exactly I did. So this is the snapshot of what I did, and like how many lots or what is the profit and loss is what I'm mentioning here. So I'll just take you to not Opstra here. I'll just show you how the Nifty has moved in the past 3 months from April till July. So somewhere around 17,000, which happened somewhere around I think 25th of March. So this time you can see like market fell from somewhere around 17,800 almost to 17,000. So at that time I was thinking, okay, market will definitely have to bounce back because it has already like went down 800 points. No technical or nothing much. General logic that okay, whenever market goes down so much, then market will go up. If suppose if has a very strong solid reason like corona or something else, then okay, but else we can just wait, because this is the time where the Ukraine Russian problem was almost getting sorted out, or it won't be a very much big trouble anymore. So in spite of that, when market kept on falling, I thought like okay, this is time to just buy. Maybe it's, as I said, it is like kind of a trading bar investment strategy. So maybe as, even if it is not trading, let me take it as a investment strategy kind of thing. I was buying this around this range, maybe around 17,000. So that's what I have given. So I bought only one lot, which is 50 quantities. Now once I bought this on 15th or 25th of April, you can see like market went maybe like 200, 300 points above, but then it drastically fell. Like till 5th of May, it was like it is in the same range, but suddenly it has like, you can see like 400, 500 points move, and it kept going down. So once it went somewhere around 13th of May or 12th of May, somewhere around 16,000, all I did was like, I just exited the 17,000. I can see like a synthetic future is nothing but synthetic future buy is like buying 17,000 call and selling 17,000 put. Maybe I would have done for it is April month. So June month I would have bought this. Like June month expiry, 17,000 call I would have bought and 17,000 put I would have sold. And now as market has came to 16,000, generally I don't keep so much in the money options. So now you can see like a 17,000 put will be like so much in the money. So definitely you have to close that and you have to move somewhere straight which is nearby to your spot so that liquidity will be high. So all I did is like close the 17,000 call and put and move to 16,000 call and put, maybe in the again in the same month, because it happened only the 5th of, sorry, 13th of May, maybe June, maybe let it be June or July. It is not going to differ because it's features. So I have moved to 16,000, but here I did two lots. So instead of, I have sold one lot here and I bought two lots here. So once I bought this around maybe 13th or 12th of May, from 16,000, you can see like market again went somewhere around to 16,500, 16,600, this range in some time. So that point of time, I closed the 16,500 and 16,000 and moved to 16,500. I kept both the lots because here I made a loss of 50,000 in the first place, and I just recovered that 50,000 because it was a 1,000 point downfall and 500 points up move. So I was like kind of in break even only, though market went 500 points down from where I bought. So now I thought like let market come to where I bought, at least that time I will give it at least 50,000 more profit. As I was bullish before, like market if it goes to 18,000 or something, I'll be in more profit. Maybe I would have closed one lot and I would have kept one lot with 50,000 profit. So now I have like two lots again, but now my strike is 16,500. So this is the condition that I have applied here. It is totally personalized. You can use whatever you want. I have mentioned like adding a lot every 500 or 700 or 1,000 points down move. Here I have made only when 1,000 points move happen. Maybe if you want, you can do 500 points or 700 points, whichever is suitable for you. Even you can wait for 1,500. Nothing wrong in that. And you can, once you have two lot or three lot, now for every little movement, then you can close something. See, once it was 1,000 point move and only 500 points up move, we were breaking even. So like if you are doing like 500 or 700, even there is like you have two lots. If the market moves little up also, you can do the break even. So you can like close at least one lot, if not everything, once it has a little up move. So just that's what I did here. Then once I closed this and I was holding 16,500 and I was having two lots here, and all of a sudden market again came back to 15,500. You can see like it has went even 15,183, 15,200, but somewhere around here I bought. I didn't buy. Nobody can catch a falling knife, so I didn't exactly catch it when it was at 15,200, because maybe there was some panic situation or so. So everybody was like waiting. Maybe okay, let it go to 15,000 or 14,800, then we'll buy. But it didn't happen. It was little bouncing back. I didn't want to miss the opportunity, so I bought somewhere around 15,500, maybe around 22 June or something. So now I have one more lot. So from 16,500 where I had two lots, now I have 15,500 three lots. So now from I would have closed 16,500 call and put synthetic, and I have moved to 15,500 call and put. Here I am booking a loss of 1 lakh. Now after market like from 15,500, you can see like market was already always in the up move for the last one move from 22 June. So from 15,500 somewhere around 16,200 something, I think there was a resistance support. These that technical you can see little. I know I don't go so much on that, but if it keeps coming and if it goes going back in the same place, then maybe you can consider as a support or resistance. So somewhere around 16,200, I thought okay, I'm getting, like you can see like 1 lakh loss was made and 1 lakh profit is coming. Almost break even is coming. So I thought I will close at 16,200. And I moved to 16,200. Now instead of three lots, I have only two lots. Then again from 16,200, you can see like somewhere around 16,700. Again, I have closed one more lot. Sorry, I didn't close one more lot because I was like, okay, still our buy price is only 17,000. So let's wait for some more time. So I still have not closed it, and I have two lots, and I made a profit here again 500. Sorry, 50,000. Then from 16,700, just like today's trade, that is today is Friday. Today market has went to 17,100. Now I have, again, I didn't close both. I'm little greedy here. Maybe I should close one lot. Usually that's what I do, but I feel this time market is having little good features, and maybe at least market might go to 17,500 is my belief. Even if it is not going also, I have already made 95,000 already now, with market just moving from where I started, which was at 17,000. Market has come to 17,100. Market has made only 100 points move. I started with only 50 quantity, so 50 quantity and into 100 would have been at least only like 5,000 rupees. But now, due to these very small minor adjustments, I have already made almost 1 lakh profit. So now if market goes down also, I don't have anything much to worry. But if suppose market is continuing to go up, maybe I'll close one more lot, maybe around 17,300 or 17,400, and I might hold one more lot, maybe till 18,000 or so. If it comes down again, maybe from 17,400, if it is coming to 16,500, I'll take one more lot. And if it again goes to 15,500, I'll take maybe one more lot. So it totally depends on you. It's not that I have a view that, okay, market is going to go to 18,000 or 18,500. Anyway, market is going to go to 18,500 or 20,000 maybe by next year, or the following year, or at least 5 years from now or 10 years from now. So this is a strategy. That's what I told. If you should always have a bullish view, so you can like park some money, some cash reserve. If you have, you can try this strategy. Maybe like instead of investing in a gold or land, if you have some reserve cash with you and you are thinking what to do with that, maybe you can try this kind of strategy. Because you can see, like, no matter what, this strategy, like even in the kind of corona time or 2018 crisis, though market falls, it always comes back strong as early as possible. So practically it can never go to zero. So all you need to have is like have some money, because you can see at this instant, maybe somewhere around 15,500, you started somewhere around 17,000. For one lot of synthetic future, you need 1 lakh capital. So when you see in this third step, you have already three lots here. So which means 15,500, you have bought three lots. So you have already deployed 3 lakhs capital. You are already in a loss of 1 lakh. So you have 4 lakh capital used here. Though I have mentioned 3 lakhs capital is what record in the previous slide. 1 lakh is like it has spent from our pocket, which also should be considered as a capital. So here you can see like 4 lakh capital is you should have already had in your money in your pocket to do this trade. And I really don't know, like from 15,500 market, for my luck, or I don't know what it is, it has kept on increasing and it is now at 1,700. If suppose market has went from 15,500 to maybe 13,500, then more 2,000 point loss I am making for 150 quantity, which is almost heading around to be 150 into 2,000 is again 3,000 points. Sorry, 3 lakh rupees. So already you have like 1 lakh loss you have booked. You have to book more 3 more lakhs loss, and you have to deploy, already you have deployed 3 lakhs. So you can calculate what is the amount of capital you need. Maybe if suppose market have went to 10,000, you can see like from 15,500, 5,500 into 150, you can do the math. So that is what it is. Maybe by that time, if it is gradually going from 15,500 to 13,500, maybe around 14,500, you would have bought one more lot. It is totally up to you. And maybe again at 13,500, if you're buying one more lot. Now at that point of time, to if market reversal coming to 17,000, you will make a jackpot. Maybe you will earn like maybe 2-3 lakhs. So wherever it is, like, so maybe if you are like kind of starting with one lot, and if you like kind of so many bad news are happening and you have so much money in your hand, if you keep on investing like a kind of trenches, then ultimately few years down the line it will definitely give you a good result. So in my previous videos you could have seen like many strategies I will like get benefit if market falls down. You can see like my pad trading strategies and all, bank nifty, I'll be like taking more oftenly bearish view. The reason only is because if it is bullish view, I'm going to get money in this case, in this kind of strategy. So I'll always have some kind of strategy where I'll make money if market goes either ways. So that is how you should trade. Though I don't make like 100 or 50% a year, I'm telling frankly, but I make a decent profit, as because I'm like only part-time trader and I'm a full-time employee. So this is kind of something you can try at your end. So this is nothing but averaging, if you ask me in a single word. But this is how it has to be done to be more profitable. So I hope this would have given you some help or some like a kind of a logic behind what I am doing or some idea on how to do, maybe you can try starting with one lot. Maybe again market is in the same position where I started, so maybe you can try it. The next week again we'll see come up with some other video. Thank you.